welcome back to another monthly market update for the Columbus, Ohio real estate market. I'm Ryan Deeter with Key Realty, and in today's video, we're going to do a deep dive into the December 2022 numbers the Columbus, Ohio Real Estate Board puts out for us to look at, and we're going to also look ahead in the next few months. I believe we're starting to see some trends that will help us predict the next few months for you. So if you're looking to do something in Columbus, whether it's buy a house, sell a house, or even invest in property here in Columbus, I would highly recommend watching this video and paying attention to what's going to happen these next few months. So hope you find this useful. Let me share my screen and we'll jump into it. All right, as you can see, I've got my December 2022 numbers pulled up here from the Columbus Board of Realtors again. And the big storylines you're seeing in the news and the headlines is these numbers here, that the closed sales are down almost 30%. Again, we've seen this almost every month. Looking back at last month in November, we saw 27, almost the same. And we can predict that because we're seeing less in contracts as well. So that's no surprise there. This is, what's in contract is always ends up what's closed. So you can see that the number of closed sales is a little higher than the number of in contract. That means there's less cash sales going on as well. Quicker closes, things like that, most likely. But the thing that I want to pay attention to as a consumer, things that I would be more focused on as a consumer, not really concerned about this. That just means that there is less home transactions taking place. And there's a lot of factors to that. The thing I'm focused on as a consumer is what are prices doing? Are prices going up or down? And as you can tell, as you see every month, they're going down since June, essentially. But year over year has been steadily strong and continues to be a pretty strong market for Columbus. And we saw year over year appreciation this month at 9.4, which is a very, very high range, even with all the market factors going on and everything talking about the market correcting or crashing, whatever you want to say. We still saw close to 10% appreciation year over year. And in the year, so we now have December, so we ended the year with 11%, over 10%. Last year, if you actually look at December 20, this is November, December of 21, we came in at 12.1. So not that far off of last year when the market everyone was just talking about the market booming and going crazy. Columbus really has not taken a huge dive by any means. Based on these numbers. And in fact, the thing I want to focus on today is that this December actually posted better numbers than in December 21. As you can see here, again, 9.4% year over year. Average sell in 21 was 291, 318 a day. That's 9.4%. Let's go back to December of 21. They only saw 6.3% appreciation growth. And so you see that growth there. And so December of 22 actually outperformed in this metric, 21, which means that, what I'm seeing is kind of showing that we actually, I think, have bottomed out in the Columbus market. The bottom's already reached, and I think we're going to start seeing a climb again in both pricing and probably number of sales too, but mostly pricing, which is really, as a consumer, what concerns me the most. Whether I'm buying or selling, I'm more concerned about what are houses costing, things like that. Now, I will say the caveat of this is last December we were not seeing seller closing costs. We were not seeing the negotiation take place that we are seeing, and that's why it's important to talk to a professional that knows the market, knows what's going on, because we are seeing closing cost being included in a lot of contracts, a lot of offers, things like that are not, just not thrown in these statistics. So stuff that we can't really track very well are those are the things that you want to make sure you have someone that you're working with that knows the market. The other things we're focused on, as if you've watched these before, are the days on market. Things on the market are staying, they're staying in the market much longer than they were before. That's a large jump from 61%, but days on market were 18 to 29. So we're getting close to that 1 month on average to sell a house, which is a little bit healthier actually for the market, for buyers especially. It gives you a chance to negotiate a little bit, but even for sellers, like, that's not something I would panic about by any means. In a balanced market, typically it's 6 months, so we're seeing 1 month there. list to price ratio. Here's the original list price received. Last year we were close to 100%. This year we're at 96%. So still very well. Most people who list houses are okay with getting, within 5% of the list price is pretty good. To be honest, and that means that some are probably getting higher than that. This is the average. Remember that. So, and then inventory. We want to focus on inventory. What are the options out there? We're starting to see a rise in inventory, but I think this is kind of not a. It's one of those numbers that's hard to track the last few years. So, inventory was so stinking low the last few years, and mainly because, houses would be on the market from Thursday and be gone by, Monday. And so they're only on the market for, half a week, if that. And so whenever they're, actually pulling these statistics, if they're pulling these statistics on a Monday through Thursday, this number is going to look really low. But now that market, houses aren't selling quite as fast, this number, of course, is going to rise because you have more options throughout the week, and those houses aren't, gone within 3 days. They may take 3 weeks instead of 3 days. And so those are, is going to cause a rise in inventory statistically. Are we having more options out there as buyers? Maybe, but I'm still not seeing a ton. And again, the trend is still the same. We're still seeing less availability in from pre-pandemic. We still see, if you go back to 2019, let's just pull it up, 2019 December, just to show you point here, we have 1.4 months of inventory. So still less inventory than pre-pandemic. So that's one of the main reasons, if not, really the sole reason that these prices are still going up, because there's just not a ton of inventory out there still, not a ton of options. Simple supply and demand. The demand is still steady, but the supply is still low. And so we're still seeing houses sell, things happen. And here's the reason why I think we've bottomed out, just because we're starting to see some, pretty normal trends. We see here the graph that we see the last, 10 years, essentially. We can see the normal trends of January being the low point of the month of the year, and then spiking in the spring. And what I want to point out here is the average price point. Focusing on this again, we see here the average price point is 318, and we've seen a month over month dip the last 5 months or so. But what I want to focus on is the last month to month dip here, which this is November of 22. We saw the average price point was 319,231. And this one's 318,581. So less than 1,000% month over month dip. But going back to last year, and this is where this December really outperformed last year as well, is 21, the average price point was 291. And if we actually let's go back to November of 21 and see the difference month to month. We saw the average price point is 295 November. This November is 291. So we saw 4,000 average price point dip. There's a lot of factors to that, but it just shows that this December is stabilizing. It's outperforming last December's, which is a sign that I think this next few months may continue to be a strong month for the sales and for pricing when it comes to increase in pricing and things like that. We're starting to see an uptick. And the other thing I want to point out is, what does this mean moving forward? And if we look the last few years into January, so let's go back what happened last year in January. So 22 January, let's go back and see the difference between December of 2001 to November or January of 2022. We started seeing, let's see, December of 21, average price points 291. January comes along, it's 290. But here's the thing. So January is the bottom, and then we go to February of this past year. Go to February, you start seeing all of a sudden there's a jump in pricing, 296, so $6,000 more on average is what you're paying for a house. But the real thing happens, the real jump happens in March. So February to March, all of a sudden it goes from 306 to 318. So we saw a big jump here in March, which is normal, happens every year. If we come back down here, you see that jump, we saw that uptick. And yeah, so what we're seeing is the normalization of this market. We're starting to see normal trends, just like we've seen the last 10 years. And inflation or interest rates and stuff has caused a slowdown these last few months. But the thing we're starting to see as well is the headlines are showing, this is actually a index here that shows us the correlation between interest rates and mortgage rate applications. And I want to show you a close view of the last few weeks, essentially, of what's happened. Let's see if we can zoom in here. You can see there. Oh, there it is. We start to see this spike happen where interest rates come down. What happens? Mortgage rates or mortgage applications go up. And we've seen that. We've seen a nice big dip here. This dip here and this dip here was two of the largest dips in the history of the mortgage industry. As quick as that happened. Now we've seen a quick rise, obviously this here is quick rise. We're seeing dips, and all of a sudden the people that have been holding out from here to here are now like, okay, it's time to get back in. And we're seeing a rise in mortgage applications, which means there's more demand. But the supply, I just don't think the supply is still matching the demand we're seeing in Columbus, which means, again, supply and demand is going to cause prices to go up, in my opinion, this next spring. And another thing we saw is just the average overall median sell. This is the national statistics put out by Redfin and their data they use. The national statistics saw a 1.8 year over year, or sorry, 1.2 year over year growth. In Columbus, we just saw 11.5. So you see Columbus definitely outperformed the national market. And I want to show you that just to tell you that the local markets are going to matter more than ever. It's hard to pay attention to the national market, the national headlines about what you should do if you're looking to make a decision in real estate. I would not pay attention to the national headlines. I would focus on the local and really focus on the area you're looking to invest or buy in. So hope this is helpful for you. If you have any questions, please reach out, and hopefully catch you on the next one. Thanks again for tuning in. If you found this video useful, please subscribe if you have not already. And if you have any questions, please leave a comment. Or if you want to reach out directly, always happy to have an individual conversation with you about real estate. And if you actually want to know what I think is going to happen this next year a little bit more in detail, please check out my market forecast that I posted a few weeks ago now. And you'll see a more elaborate version of what I think is going to happen in 2023 and a lot of data and information that I share there as well. So check it out. Let me know what you think, and hope to see you next time. Thanks.